Hey everyone, welcome back to Kitco Mining. I'm Jeremy Safran, reporting from the Rule Symposium here in beautiful Boca Raton, Florida. Now, the mining sector is seeing a new phase of capital discipline. Years of consolidation have left fewer standalone development stories, especially in Tier 1 jurisdictions. And majors are watching, but they're also being very selective. Investors, they're hunting for companies that can restart proven assets with a clean balance sheet and permitting already in hand. One company doing that is West Red Lake Gold. Of course, that's operating in Ontario's Red Lake camp as part of their Madsen Mine. Now, they're already in production, and we're going to talk to Shane Williams, President and CEO of West Red Lake Gold, about what you're up to. Good to see you.
Great to be on.
Before we get into West Red Lake, I want to just zoom out a little bit because there's been some interesting opportunities within the majors, and we've seen some M&A take place. Shane, I mean, you've worked with the majors, Newmont, Rio Tinto. What do you think that the biggest producers are looking for, right now in this current wave of consolidation?
Yeah, it's very interesting because if you remember back to the last big gold bull, everybody went crazy. They bought each other, they bought it. What I'm finding now is they're much more selective.
Yeah.
There's the deals that have been done, mergers and acquisitions, have been very strategic, have been very sort of measured, but they've been good value. So I believe that capital coming into the space, they're looking for near-term cash flow for sure.
Yeah.
They're looking at projects that they don't have to develop. They're looking for once you go into cash flow, they're looking for those projects.
Right.
That's what I find is getting some of those where the, Windfall and those projects, just as they get into production, then they're snapped up.
Now, this current wave that we're seeing, I mean, do you find it's consolidated too many quality projects? Like, are there any left out there?
They're getting few and far between, except ours, of course,
of course.
But yeah, it's getting hard. Look, it's getting harder and harder. You know what's really actually more difficult? Finding people.
Yeah.
I know there's a lot of money in the space. There's a lot of projects, but there's hardly a lot of people. Like, look at the conference. A lot of people are over the 60s. There's not a lot of mine builders there. So if you can get a team to move from A to B, that's where I think that the big majors don't have teams anymore to develop the early stage. So you're finding as soon as you get into production, they're buying. And the early stage. So that's, I think, the sweet spot they're looking for.
That's interesting. And as you bring up the Rule Symposium, I mean, we've been talking to investors for how many days now? You and I are starting to speak a different language, but people are starting to kind of wake up to gold miners. It seems like there's more meetings being had. It seems like the investment opportunity is there.
Yeah, it's interesting. I was here last year. It was a bit more subdued. This year with gold as it is, I mean, we're meeting investors, a lot of U.S. investors, a lot of investors with businesses outside of the industry wanting to learn. So it's beginning to change, I feel, in the US in particular, with the challenges going on in the US at the moment. Investors are looking at gold, what projects are out there. They need to be selective as well. So we're finding that.
Now, when we talk about that consolidation within the M&A space, I've talked to some retail investors and they've said that it's hard to find an asymmetrical, upside when you're getting all these takeovers. Is the developer space now too thin, do you think? I mean, why does Madsen kind of stand out in that space?
So, yeah, look, the developer is thin. This year, we went into production. We're only one of 4 companies that are going into production. Artemis, in Canada, we're only one. Artemis was the big one this year. We're in production. Next year, we'll be into production, really. We're the only one in Canada next year. So it is getting, and the advantage that we have, or disadvantage, is we don't have the scale. And it's kind of, I see it as the tortoise and the hare.
Yeah.
We're trying to slowly build value as we go, rather than just rush in. Some of the big projects, through 200,000-300,000 ounces, they're the ones that are going to be the first ones to be swallowed up. But what I'm hoping to do is build scale over a number of smaller projects and build over time. And that allows our shareholders to get that value before the majors come in.
Yeah.
Because you're right, people go in, they invest, and then the majors come in and scoop them up, and that's it, really. They get the majors. Whereas I'm hoping that because we're a 60,000 ounces a year producer, we can slowly build another one to 60, 120, another one to 50, and slowly build up. So our shareholders have time to build that value.
Yeah, and I mean, I just remember talking to, I think it was Gwen last year at the show, and she was talking about how it's a show me story. You're showing the audience, I mean, you're producing. That's a lot of big difference from last year.
It is.
You have cash flow?
Yes, it's nice to be here. And remember, the company was only formed 2 years ago. Yeah. So in 2 years, we've taken a failed asset, turned it around, raise the money, put the thing, and 2 years later we're in production. Very few companies were here last year were developers, and this year is producers. So we've told people this is what we want to do. We've done the work, and now we've showed them.
Now, you've taken some bulk samples. Obviously, you have some technicals and some learnings beside. I think you processed, 5,000 tons through the Red Lake mill?
Through the mill,
okay.
yeah.
And you said that the result met expectations. What did you learn? Not just in the geography, but in terms of the mine plan, mill capability, all that stuff.
So part of the issue with the previous operators that failed, I think a lot of people blame the ore body and blame the management. So it was a combination. What we wanted to prove is the ore body is good. It's a good ore body. The Madsen Mine works from geology. So part of doing that bulk sample was to take the model, do the drilling, do the work, take that model, process it. What we've learned is, yes, it does work. If you do the work, you do the right way of doing it, it does work. Part of the other learning was that we can mine in the area. It is growing. There is a lot of upside here. So that was another important learning of the project.
Yeah, it's been interesting also to just watch the jurisdictional aspect of it too. I mean, Ontario, obviously a very safe jurisdiction for mining. Is that priced in here? I mean, are the Canadian government working with you? Are you starting to have actual talks?
Yeah, we are. Look, I mean, there's been recently in Ontario, I don't know if some of your viewers, Bill 5 has been passed by Ontario, which allows you fast-track permitting. So that really is a discussion that's ongoing today. We had another permit, a Rowan PEA came out the day before yesterday. That's another addition to the project. But we've been talking to the government about fast-tracking that into permitting. So they're really beginning to turn the corner about that. But again, in general, I believe that Canadian gold mines are going to get that value because we're having issues around the world. You have issues in Mexico. Big countries that are there, West Africa is getting unsafe, different areas. Everyone's going to come back to Canada, and that's where you're going to get that tier 1 value.
Yeah, especially with Barrick and what's happening in Mali right now. Is a big discussion at this conference. In terms of cost control, I mean, you talked about how difficult it is to get staff. Yeah. We've heard that from a lot of people in your position. Given the inflationary pressures across the sector, I mean, how are you kind of controlling that capital outlay? So
again, one of the strategies we picked is the Red Lake region. A lot of history of mining, a lot of big mines have been there. So it gives you, I saw Agnico, I don't know if you saw the Agnico presentation. They talk about regions, why they go to areas. There's people there, there's the services are there, the people are there, experiences there. That's in Red Lake we have. 50% of our staff is local. They all live locally, so you don't have costs, fly in, fly out, etc. We have suppliers in the region, we can negotiate with them. So that gives you a good base to build upon. That's how you control it, by being strategic of where you're mining. Yeah. You could go somewhere, middle of nowhere, you fly in, fly out, you have to bring in everything, it costs a lot of money. But being in Red Lake gives you that benefit of that.
Yeah, established. You've said previously that this is not $200 million build. Give us a sense of the capital intensity behind it, where you're at.
Yeah, so we're finished all our capital now. Yeah. When we bought the asset, there had been $300 million spent on the project. It's a lot of money. We bought it for $6 million, so we bought it fairly cheaply, so we had a good base. We've subsequently spent another $100 million on the project to get it to production. The majority of that is drilling, underground development, etc. But that's so altogether it's been spent, let's say $500 million of Canadian dollars. If we had to build that mine today, it would be, I would say, close to $1 billion and a 5 to 7 year permitting development window. So that'll give you the sort of value that where we are, that we have inherent in our company going forward.
I mean, I was looking at some of your latest news releases. I was running some math. I mean, are you talking about making $200 million in revenue?
$200 million in revenue next year. Next year, $200 million.
At these numbers?
It's a great time to be a gold producer. It's perfect. And at these numbers, this is just a base case, $200 million in revenue. And some of your viewers and listeners can take that and, I saw the First Majestic, I saw they're trading at 6 times sales, 6 times revenue. You know what I mean? You take that that's where we potentially will be this time next year.
What do you do for the shareholders? When we talk about dilution, we talk about some of the other miners are giving back, they're doing share buybacks, they're doing dividends, that kind of thing. Talk about shareholder value here and how you're going to give back.
Yeah, so a lot of at the moment, we're in the early stages, we're ramp up, a lot of it there. I think the best way we can give shareholder back is keep pushing the company forward. get those shareholders in, get the value of the company up by all the steps I said, more projects, more opportunities, and doing some M&A. And that will drive shareholder value for the shareholders who have been through it. Yeah. Eventually then growing the business our goal is to get to a mid-tier producer. Grow that company. That's where you're going to get the shareholder value.
And I mean, you're producing capital this year. You're producing cash flow.
We're producing cash flow. We'll be free cash flow probably by November this year.
Wow. Well done. I just got to talk, about the next catalyst. If you're talking to existing shareholders out there, prospective shareholders watching, certainly there's enough in this room. What's the next updates that they can expect?
So the next updates will be, we will be into commercial production. So I would say by September, we'll actually be into commercial production. And that's a trigger for free cash flow. So as we get there, investors can go, oh, they're there now, they're making free cash flow. So I think that'll be a milestone that a lot of people are watching. The Madsen story, Gwen might have said, is a show me story. Yeah. It's a show me story. So we're not there yet, but we've been so far been able to prove it, and I hope that as we go forward, we'll be able to show that.
That's what I was going to ask. How do you manage the expectations on the timelines front? Because it was an existing mine. You have that, right?
Yeah, I have, but it was a struggle at the start. Yeah. The mine had failed. A lot of people I talked to said they never want to hear of that project again. Don't ever let me come near that again. But slowly, we've done we've been conservative. We haven't, people said, some of our big shareholders, let's go back into production straight away. But we've taken the time, we've done the work. People are coming back in when they see the work we're doing. We're doing the steady approach. So it has been tough, but I think some of our newer shareholders have come and appreciate that slow, steady approach to mining.
Well, you say it tough, but taking something from a couple of years into production, it's a good reignition.
It is. It's a good reignition.
Shane Williams, appreciate making the time. Of course, President and CEO of West Red Lake Gold. Of course, we're going to be here all week long with Rick Rule. Many more guests coming up, so stay tuned, subscribe. We'll see you next time.